All right. Well, thanks for letting me present today. The kind of the intent for today's presentation is just to give you a real high-level overview of the K-State budget, and as well as some funding trends, some of our costs that we face every year. I want to start out just to make sure that we're all kind of speaking the same language. Just kind of go over some quick terms and definitions. Things you might see in K-State Today articles, or you might hear in your different departments as they talk about different impacts of the budget cuts that they're facing. But make sure we're all on the same page before we get into some of the financial information. Just to be aware, K-State works on a fiscal year basis, just like the state of Kansas does. It's currently we're in FY18. It runs July 1 through June 30th. So we run parallel with the state of Kansas. A term that you're commonly going to hear is OOE, or other operating expenditures. And basically that bucket that we have in our budget is representative of everything outside of salaries and wages. So we have primarily two buckets that we budget at the university, salaries and wages and OOE. And OOE is basically all those sort of ancillary expenses that you incur operating a department or running a classroom, or in my office, I might travel, things like that. So those are those expenses that you would see in the OOE budget. At K-State, we also have a unique function or aspect of our budget where we have three different sub-agencies. So we have a bucket where we budget main campus expenditures, what you might primarily think of as here in Manhattan, Kansas. We also have our Vet Med Center. That's a separate sub-agency. That's located over across from Edwards Hall or the tennis courts. That's Vet Med. And then we have research and extension, which is primarily representative of some of our land grant activities that we do as a land grant institution for the state of Kansas. Now we have these sub-agencies and we're able to break the budget out into these different categories. And the reason why we do that is when we turn our budget information into the state, it allows the legislature to have a little easier way to compare us to the other Regents institutions. Because if we have all of this combined, and the first question that legislators might ask is, well, how does your budget, K-State, compare to KU? Well, KU doesn't have a land grant mission. They don't have a Vet Med Center. So it makes it, by separating these out, we can more easily say, okay, compare K-State's main campus budget to KU's budget if you're wanting to compare funding disparities or funding differences between the two institutions. So we have, and there's lots of different ways to slice and dice the budget. These are just a couple of them. Another term that you're going to hear quite a bit is State General Fund, or SGF. Those are the dollars given to us by the state of Kansas, appropriated annually by the legislature. And then, of course, there's student tuition, funds paid by the students based on your charges on a per credit hour basis as well. And so the main focus of my office is we primarily are worrying about and tracking and in this year, pulling back general use funds. It's our what we consider our sources of revenue that are most that comprise our base operating expenditures. And they're GU. So the formula is the SGF and tuition is equal to GU. And those are our most flexible dollars that we have available to us to operate the university at this point. The other type of funds that we have available to us is called the restricted use funds. And that's basically all the other funding sources that come to us as an institution. So it's revenue that we get based on our federal grants or contracts that we might have earned, gift income, sales and service, all of those additional revenues that come in, but they come in for a dedicated purpose. They're not for our general operations. And so we call that our U budget, and that generally is handled separately from the GU in terms of how we manage the university. Now, some of your specific college fees actually are dropped into the RU side of the house, and that's primarily just a way for us to denote that those dollars that are assessed by a college for a particular college fee go directly back to that college for that purpose for which the fee was raised. I should have said, I'm happy to take any questions along the way. So feel free, you don't have to wait for me. Another category of funds that we have available to us, which is also considered RU, is our federal land grant dollars. That's provided to us by the feds for our research and extension activities. And I like to show this slide because I think it really represents the impact that K-State has, not just in Manhattan, not just in Riley County, but across the state of Kansas. We've got a huge research enterprise that takes place across all the different counties of the state. We have extension agents in almost every county out there. So K-State has a huge impact to the state of Kansas, primarily due to our land grant mission. But it's also because of our research activities that we have, impactful to the state, impactful to the nation as well. So we have a broad reach, and I think typically we tend to think of K-State as Manhattan, and we impact a lot broader section than that. Almost done, and all these will make sense in the next slide that I show you. So we also have auxiliary funds. Those are funds generated by those units that are self-supporting. So it's our housing and dining services, our parking and student health center. So those units are self-supporting, and the funds, we put those in a category called auxiliary. We also have our local agencies, that's athletics, student union, publications. And then our last one is our service clearing, and that's essentially where we have some units that are on our campus, but provide a service to other units of campus, and so they'll charge a fee for that, performing that service. So ITS, we asked them to come out and look at potentially installing a Wi-Fi point in our building. So they were going to charge me it was going to be too much, and I didn't want to do it. About $1,300 to put in a Wi-Fi. Well, that fee that I would have paid for that service would have gone into the service clearing fund, because I was paying it out of my GU budget. So that kind of helps us keep us from double reporting to double counting some of those expenses as well. So here is the FY18 operating budget. All the different fund sources that we have available to us, state appropriations, student tuition, all those areas. We estimated in June, when we set the budget, June, July, that we were estimating about a $900 million operating budget, split between RU and GU. Yeah, you're gonna do that. No, I appreciate that.
Sorry about that. Should have done it earlier.
Yeah. So again, state appropriations and student tuition, that's the GU bucket, and that's about $400 million, $496 million for all the RU side of the house. So it's a little less than 50-50 in terms of how we finance the institution between the two different buckets. Now again, I typically in my office, we focus on the GU budget. That's what you hear a lot of as impacts, and right now when we're going through callbacks, that's the focus everybody is worried about at this point. So if you want to take a look at the GU budget, where do we have, where's most of our money tied up at? And so you can see we've got, again, I broke it out by the different sub-agencies, and we broke it out between salaries and wages and OOE, those two different buckets that we talked about earlier. But you can see down at the bottom of our total GU budget of $404 million, 75% approximately is tied up in salaries and wages, is tied up in people. And then the other 25% is OOE. Well, within these OOE categories, we actually have dollars set aside for student scholarships and also our utilities and debt service payments. So those are generally non-negotiable items that we have to pay for every year. So if you back those out and reran the numbers, you actually get closer to 80% of your budget that's available to you for sort of the non-discretionary items tied up in salaries and wages, tied up in people. And that's where everybody, whenever we do have budget callbacks, everybody's extremely sensitive to those because of the impact that they see in terms of being able to staff areas appropriately, hire faculty members, all those things that we do as an institution that rely so heavily on people to deliver the services that we provide. Any questions? I'll take questions from you too. So let's talk about some funding trends that we have at the institution. We have looked, so this is the state, the GU budget, comparing it from 2007 to 2017, and I've adjusted all the numbers for inflation. And what you can see is back in 2007, state funding, which is the black line, accounted for about 58% of our funding mix of GU. So you remember, GU is the state appropriations and the tuition budget. It accounted for about 58% of our budget at that year, and student tuition was about 41%. Now you fast forward to FY17, and what you really see is that has flipped almost opposite direction then, because of our state funding has declined. So to where today state funding accounts for about 38% of our GU budget, and the tuition is 61%. Now, the thing to understand is that it's not necessarily that the state has cut us. They have cut us, and we are receiving less state dollars over this period of time. But there's also the impact of the state not maintaining its investment level. So as our operating costs have gone up, the state hasn't necessarily matched those operating costs on a dollar-for-dollar basis. And so what we have found is we've had to rely more and more on tuition revenue coming into the institution to keep up with our rising costs that we incur every year. So essentially, we've seen about a 31% decline in state funding and a 53% increase in tuition revenue. Now, not all of that is related to tuition rate increases. Some of that is also related to the enrollment growth that we experienced during that period of time as well. When you look at it in total, that green line there at the top is just to say the total budget over that period of time. We've seen about a 3.7% change from 07 to 17. So we've, in a lot of ways, kept our operating budget very flat throughout this period of time as well. So to give you some perspective, again, we've talked about a lot of our budgets tied up in people, but just to give you this sort of a scope of the size of the institution that we have here, we've got 863 acres of campus, 211 buildings, 26 acres of streets. So we have a large enterprise just here in Manhattan, and that's what most of those numbers are. So it takes a lot of people to sustain that. It takes a lot of custodians. It takes a lot of building maintenance folks. It takes a lot of people instructors to be able to be in those buildings teaching the classes that we have. So we have a large enterprise. And so Jack actually asked me to put this chart in, and I do apologize because I didn't have time, or I haven't updated it yet. But I've changed now to reflect 2006 to 2016. And so what we were looking at there is to say, okay, K-State, in terms of what you've spent out of your GU budget per our student FTE, what has that looked like over the period of time? And so you can see, again, adjusted for inflation, that our overall, the top line there is to say our total overall GU budget expended per student FTE has remained fairly flat in terms of the overall increase in period of time. So we've had about a 9% increase in expenditures during that period of time per student FTE. But you can see quite a significant change in the funding mix per student FTE during that time. So our state dollars have declined dramatically, while our tuition dollars have had to make up the decline in that as well.
Good question. Sorry, what is student FTE?
Yeah, full-time equivalency. So depending on how many hours you're taking, okay, what we count you as a student.
Okay.
This slide is, I kind of threw this in there to try to give a perspective of what are the costs that we're seeing hit our GU budget every year. What are we facing as an institution that we are trying to address every year when we're balancing our budget. And so primarily what you can see here is, let's talk about the purple line here. That is meant to be utilities costs. And these numbers are cumulative every year. So we face, again, we have 863 buildings, lots of facilities. We have increased utilities costs every year, either because of consumption, which actually we've actually seen a decline in some of our consumption due to some of our recent conservation projects, or we have no control over our utility rates that are applied to us as an institution. So you can see that purple box, we've seen increased costs every year to address increased utility rates that have come online. The tan box is, or let's start with this, the reddish box. We work very hard every year to build it within our budget, faculty salary adjustments. So as new faculty come online, they move through the tenure process, they have a promotional increase available to them once they change ranks. So that has a cost to us as well. We've also tried very hard to come up with additional faculty salary incentives that we build into the budget. So every year, faculty salaries is a key commitment that we've tried to maintain in the budget so that we can try to improve upon our average faculty salaries that we have. I've got another slide that later on that talks about that. So that's a continual cost that we face every year, new dollars that we have to invest to account for those costs. The last one that you might see, which really starts picking up in 17 and then 18, is our enrollment decline. So it's a loss of revenue. I'm sort of treating a revenue as an expense in this view, but it's a budget pressure that we face in terms of we have less students here on campus, so we're generating less revenue. So we have to address that as part of our budget balancing every year. So what are some of our common items driving tuition rate increases? I've mentioned it before, it's our increasing utility costs. We also are subject to, as an employer of the state of Kansas, we have to follow the state of Kansas's fringe benefit policy. So the state offers group health insurance. That's a good example for this next fiscal year. We participate in the state's program. Well, they've told us as an employer, next year, your rates that you pay for the employer's share of group health insurance is going to go up about 7%. So for us as an institution, for the GU budget, that's about a $1.6 million price tag that we weren't anticipating next year. That is, we're going to face because of that increased cost. Now, what would have been nice is this, the state said, okay, well, you're going to pay more, but we're going to give you some more state funding to help offset that cost. That hasn't happened yet. So that's where we have to come back in. That's what I mentioned earlier. It's our increased operating costs that we've had to find ourselves more and more reliant on tuition to help offset those increased costs because the state hasn't maintained some of its commitment to the university. As I mentioned, faculty salary initiatives across the university. We've tried very, very hard to increase our average faculty salary. But again, we're in competition with a lot of other, not only just our Regents institutions here in the state, but our peer universities as well. And so we typically find when we do a survey of our average faculty salary, we rank at or near the bottom of our peer comparison institutions. So when I say that, I'm not trying to imply that because we pay so low, we don't have good faculty, but it is difficult to retain good faculty when we have such a low average faculty salary. And then in FY18, that was our first year since FY15 that we were able to give a general university increase to our employees, to everyone else essentially, outside of faculty salary changes that took place. And so, although we were able to do that, their employee costs for group health insurance also increased. So some employees, although we gave them a salary increase, ended up having a net loss in their paychecks because of the increased costs in their health insurance. So again, these are things that, that we, as we're balancing the budget and we're looking at new costs coming online, that we're trying to account for in why you might see a tuition rate increase before you as the TFSC. And there might also be targeted investments across the campus for enhancing new initiatives or implementing new initiatives. And then obviously we have in the past had to look at backfilling state funding cuts with tuition dollars to help offset some of those, that lack of state funding, keeping up with us. Here's the historical tuition rate changes. Again, I just put the undergraduate resident rate there. just to kind of give you the perspective since FY12, what the different types of tuition rate increases we've implemented here at the university for your information. So, okay, K-State, you are constantly asking, you're facing increased costs, you have, so you're always coming to us for increased tuition rates. What are you doing to be more efficient as an institution, as an operation? And so we've looked at, implemented previously some operational efficiencies, paperless processing, and some of the stuff that you're going to say, well, you should have been doing that. And we are working on some of these things. We might be a little bit behind the times compared to some of our corporate partners. But paperless processing, I don't have printers on every desk in my office. We've gotten rid of all that. We just have one single printer that we go operate off of. It's a lot more efficient, a lot less printing, a lot less costly to maintain all those different cartridges that come through. We are encouraging our different units to use the procurement card. It's a lot easier to process the payments on the procurement card. We have purchasing collaborations with our Regents universities so that we can leverage that buying power of all of our Regents institutions to get the best price on different contracts or products. One thing that was recently done that I think is in terms of more efficient use of our employees is maintenance zone teams. So in the past, an individual might have, a maintenance person might have been assigned to, let's say, Dykstra Hall and gotten a call to do a service ticket. Well, in the morning they might be over in Calvin, and in the evening they might be over, or in the afternoon they might be at Weber. Well, that's a lot of travel time between different areas. Probably not the most efficient use of your time. And so what we've gone to is zone teams where they're effectively, maintenance folks are assigned to a particular zone. They get to know those buildings within that zone, and that's their travel time that they are spending, which is a lot more efficient use of the day for those employees. Our Vice President for Administration and Finance recently implemented shared services. So what is shared services? Shared Administrative Service Center. Essentially what that is rather than having individuals in all these tiny little departments that might be working on paying the bills once a year, maybe doing a hiring action, maybe marginally able to sort of track the budget for their individual departments, which is very inefficient. And while they're all good people doing a very good job, there are always lots of errors because they aren't doing those activities very often. They're not hiring people very often in those departments. So what we've done in the Administrative Service Center sort of consolidate to have an accounting section that services those individual departments. But you might have one person that services multiple departments and is doing those activities on a daily basis. So our error rates are going down quite a bit in terms of as we process vouchers, as we process expenses. The error rates in terms of are we paying our bills properly, are we coding everything properly, those are going down because individuals are doing them on a daily basis. The other one that you might say, well, why haven't you done this before? Automated time and leave reporting for the Vice President of Administration and Finance Unit. So right now in our facilities area, I think on a bi-weekly basis, they process about 300 paper time slips. So you're processing tons of paper. You've got individuals dedicated to looking at the paper leave requests and paper time slips. And so it's very, very inefficient. And so what we're going to go to is sort of a badging system to where people badge in and badge out to record their time worked, and then also automatically process their leave requests. So you get the human element out of it, you get all the paper out of it, and that frees up those individuals that are spending their every 2 weeks processing all that paper, frees them up to do other activities that we need them to do. So those are some operational efficiencies that we've implemented.
Do you guys know what he means by business procurement card?
It's a state credit card.
Credit card, basically. This is one. This is mine.
You get your own?
I do.
See, they won't let me have one.
That's not very efficient.
I don't buy it. terms of an IT infrastructure, which is always a very costly component for institutions, we've migrated to converged hardware architecture, provides faster response times and utility savings. And then we've converted a lot of our computer labs to virtual desktop environments, so that saves that hardware cost of having all those desktops. So I went through that rather quickly. Any questions? Everybody stayed away.
That's right. I think, could you give a brief update on kind of what you foresee the state doing? Well, that might be a loaded question, but this coming year.
So, I mentioned we've had declines in state funding, right? It hit us really hard in 07, 8, and 9. That was when the state was going through, and the nation was going through the recession. And then since then, beginning in FY12, the state of Kansas implemented their own tax policies. Well, those tax policies reduced the revenue coming into the state, which necessitated some reductions to all the region's institutions and other state agencies. So we also saw funding declines beginning in 15, 16, FY15 and 16. There was a significant change in the legislature, the makeup of the legislature. They went a much more moderate route from the very conservative to a more moderately conservative, I guess you might, mix of the legislature. And so they overturned those tax policies. And subsequently then, more revenues are flowing into the state. And so for K-State, we actually saw some benefit from that. They partially restored a 5% reduction that had been applied to us back in FY17. They partially restored that this year. And they've promised us in the appropriation bill another partial restoration. So we went from a 5% cut to now we're at about a 3% cut overall for the institution. So we see some positives coming back out. We see some change in mindsets up there at the legislature, and they've obviously followed through by changing their tax policy and appropriating dollars. Still not enough, and still hasn't necessarily kept up with our rising costs that we've incurred as well. The big unknown in the room is the K-12 Supreme Court ruling that recently came down, and the Supreme Court has told the legislature you have until April, I think, to come up with a funding solution to for K-12 schools that adequately funds those institutions. So no one really knows what that means. No one really knows what the dollar amount is needed in order to satisfy the Supreme Court's ruling. I've heard numbers anywhere between 200 million more a year for the next 5 years to, we need 600 million right away, which is going to be difficult for anybody to spend an additional 600 million, you would think. 600, I mean, you might be okay, Jack, so you can probably spend it in 1 year. So that's an unknown. And it's unknown because we don't know how the legislature is going to potentially fund it. Are they going to raise taxes again, even though they just raised taxes last session? And a lot of them are going to be up for election this next year. So the appetite for that, probably not so high. Are revenues beating expectations enough that maybe they can come up with enough funding to satisfy the court's order, but everyone else's funding remains flat, possibly? Or do they need to cut budgets in order to fund those additional dollars? So that need to go to the K-12. So that's sort of the unknown of what's out there facing us this coming legislative session. But overall, I feel like we've sort of turned the tide and from a very conservative sort of viewpoint in the legislature of we want smaller government, to recognizing that particular policy hasn't worked. We're going to try something different and go back. That was a bit of a long-winded answer to your question.
Appreciate it. What other questions are there for Ethan? He's an expert on all things budgetary. Real.
Ethan,
Yeah.
Can you kind of walk through the process how a department or how a college requests their funding from you? What's the budgetary process? Zero-based or?
We are an incremental-based budgeting. So basically what that means is you get what you got last year, plus or minus any differences that we might need to apply. But essentially, funding decisions that were made 5 years ago, 10 years ago, So let's say, I don't know what college you're.
The graduate school.
Oh, graduate school. Okay, let's say we gave graduate school 5 years ago funding for 5 new positions. Well, over that period of time, they figured out, well, I don't really need 5, but I'm going to keep those salary savings. We never go back and review those funding decisions. It's all, like I said, incremental. Year after year, you get what you had the prior year. What we have typically budgeted is any new cost of operations. So we would give grad school additional funding for the fringe rate costs and any salary initiatives that might have been applied for. Outside of that, there isn't necessarily a formal process anymore about requesting additional funding for initiatives. In some ways, it kind of depends on who you go to, either the provost or the president, to request additional monies going back into your areas. We are looking at, as an institution, working on a new budget model. And a lot of that discussion is still ongoing about what we're going to go to. But we're actually looking at trying to break away from that incremental model, which isn't very efficient, doesn't allow us as an institution to redirect monies very easily to strategic priorities. But breaking away from that old model into a new model that might more incentivize enrollment growth, incentivize research, because that's also part of our mission, is to be a top 50 research institution. And also student success goals. I mean, we want to be able to build a model, a budget model that incentivizes behavior rather than what we have today, which is where dollars are sort of locked in, baked into different areas based on decisions that maybe were made 10, 15 years ago. So that's exciting. That's, well, sort of exciting. Yeah.
Okay. When like state like callbacks happen, could you talk about like how that happens and how like each college is cut across the board?
Sure.
Because I know that's something that's like really affecting like modern languages.
Right. So there's a difference between, well, not mechanically how we handle it's the same, but if the state cuts us, either it's the governor has to do it through his allotment power, or the legislature does it when they're balancing the budget, making and writing the appropriation bill. And so those two actions is when we would see a decline in state funding potentially from what we have. Now, what we are experiencing this year, which is purely on K-State, is a drop in enrollment revenue or tuition revenue. And so the way we have handled it, again, it gets back to our incremental model that we are currently under. We determine how much our drop in revenue is, how much less it is than what we were originally anticipating. So, you know, if you, I don't want to go all the way, well, I can't go back on that thing. But if you go back to what we originally anticipated for tuition revenue for 18, well, we know we're not going to hit that this year. And we're going to come in about 10 to 12 million below that number. So we basically at this, what we have done for years is apply that drop across the board in the same percentage fashion against every unit's GU budget. So it's essentially just, we know we have to get 10 million. In this instance, it came up to about a 4.45% cut that each unit had to apply to their GU budget in order to return those dollars back to Central to pay for that.
And does unit mean college or department?
So we calculated on we can calculate it on a department level. We can calculate and roll it up to the college level. What we do then in my office is once we issue those targets out to the different colleges, we leave it up to the dean to determine how they're going to apply that out to their individual units, right? So each dean in a college has their flexibility to decide, okay, I'm going to do the same thing that a university did and apply it across in an across-the-board fashion to all of my units, or I might look at a different way of cutting the units in my area. So that's kind of mechanically how we do it.
Makes sense.
Yeah.
So part of what you're seeing is there's been, nothing's reset in 20 years. You know what I mean, I guess is what you're seeing from some units on campus is that budget was set a long time ago and it's never reset again. And it might be way out of balance. You know what I mean, I guess, with where the revenue is being generated with where it's going, you know, and things, or where students are taking classes, you know, compared to where the money from that tuition is going.
What I can see when I look at student credit hour production, because that's what I do a lot of work with, is you can see over the last 5 years, there's probably 3 colleges that have grown in main campus, on campus credit hours. I'm not counting global, not counting evening or anything like that. And that's business, ag, and engineering. Those 3 institutions have grown in overall credit hour production. And then almost every other college has decreased. Now, there's a wide variety of reasons. It could be more students are taking courses online, which in our budget model is a completely different way of those funds flow out. Could be that, I know for my own son who's about to come in, he's bringing in a lot of hours already, and potentially some of our general service level courses, not as many students are taking. But overall, when we've had a drop, even though these 3 colleges have grown, we've applied the same percentage cut against them as we have those that have declined. And so that's where, again, it's not a very strategic way of doing it, but that's politically how we've been able to manage those types of reductions across the board. So
Yeah, that's the reason I asked, is because we actually just had a dean's forum with Dean Dawson in College of Engineering yesterday. And a lot of what he mentioned was how College of Engineering is growing.
Yep.
And is basically, being cut disproportionately.
Right.
And
But
it's not
it's
fair.
also growing versus some set time. You know what I mean? So when
yeah.
the new budget model is like, you have this many credit hours, you know what I mean? You get this much funding. And so it's divorcing from the fact, are you growing or not growing? Because it could have been that other colleges or youth grew much faster before, you know what I mean? Or were much bigger. And then just in the most recent time are not growing, I guess, and things. And so it's trying to normalize, I guess, things, if you will, to say that, yes, growth is going to matter, but the fact that you grew in 3 years and maybe some other college or unit grew 6 years ago really big and then it's come back, I guess, a little bit now, it shouldn't, necessarily, hopefully it starts to normalize some of that arguments where it's like, okay, yes, you're growing now. You know what I mean? And so you do deserve those extra resources to come along with that.
because that's the intent, is in some fashion, if the hours that you're teaching, in some fashion, those dollars are going to go back directly to that college that they've earned. And there's lots of different variations within the formula how that works, but that would be the intent. So Dean Dawson, yeah, he has grown, he is instructing more students, but those revenues in the new budget model would go directly to that college as well to help sustain those costs.
I think it's a really interesting point, Dr. Winchell, that's something I haven't really thought about is there's a college that's been historically it's grown more rapidly than another. That does have the tendency
my
to skew the
college
numbers.
was huge in 2014, like filling our classrooms. You know what I mean? Sort of big, like we can't take on any more students, and we've been regressing back some now. We were probably as big as we could handle. You know what I mean? And so some regression isn't totally unexpected. You know what I mean? But the fact that we were so big then and not growing now, and if we were growing then and the other ones were, you know what I mean? So I don't know. I guess it's
College of Ag too, they experienced the same thing. They grew years, they were
Right.
growing quite big,
Right.
and then these last couple of years, they've sort of leveled off,
Right.
maybe gone down just a
Right.
little bit.
And so, if you have big classes and you're doing your job and the students are graduating and there aren't many coming in, you're going to shrink. You know what I mean? I guess is the way it's going to work. But that doesn't mean that's not an excuse. You know what I mean? I guess. But part of the reason we're very supportive of the new budget model is it starts to say, okay, this is what you teach. You know what I mean? And so we're going to return revenue based off of that, not, oh, you increased. You know what I mean? It's like, well, maybe you increased, but it did reset 20 years ago when you dropped by 50%. You know what I mean? And so now you're
Right,
still
exactly
increasing, but it's still divorced from the revenue generation that's occurring or the student credit hours that are being reduced or taught.
Well, and I think that's what I thought was kind of interesting is I know we had a huge graduating class, like in engineering specifically last year. And it's, look at that, like if you're looking at head count, in like a year, if you have 5 years of students, whereas most of the colleges have 4, that, would definitely inflate your numbers. Inflate, I don't mean that falsely, but you know what I mean, like it would change them, so.
I think our hope is too, if units, because what I've always heard under our current model, units aren't necessarily incentivized to grow, right? Because it's not guaranteed that as you grow, you're going to get that funding, that additional funding that you've generated back to help you hire additional faculty to address the class sizes that you might have now.
Right.
And so what we're hoping is by returning more of the revenue that's generated directly back to that college or that department, that incentivizes them to say, okay, I'm going to grow, I'm going to see some benefit from growing. And then in a lot of ways, as everybody grows, all the boats rise with the tide, right? So that helps out the entire institution because more dollars are being generated for everything.
Do our other peer institutions budget that way to
A
zero?
lot of them
way?
do, yeah, a lot of them
Okay.
do. Actually, it was funny that we've had there's a company called EAB, it's Education Advisory Board. I don't know. if
I
you've
work in academic advising, yeah.
Okay.
Mhm.
So they actually have come out and given lots of presentations. That was actually a question asked. Across the nation, probably about 2/3 is the answer that they had. These institutions are still in the incremental model. But you're seeing more and more institutions move to what we're trying to go to, which is called RCM. It's basically resource center model to say, okay, if that unit is generating the revenue, they get the revenue to them. But the key point of that though is, yes, you're getting the revenue, but you're also going to really fully realize the cost that you generate as well. So like, I'll pick on Brian, your department, you occupy a certain amount of space within the facility, right? Well, he doesn't pay any utility bills today. It's all covered centrally in our budget. But under the new model, we would take a look at, I'm just saying this, we would take a look at how much space is he utilizing and allocate to him a bill for that utility cost that he incurs by occupying that space. So it's meant to be more transparent for units to understand, okay, this is maybe the revenue I'm generating, but these are the costs, and what can I do? I can either increase my revenues or I can potentially decrease my costs. And so in the back of my mind, I keep thinking, well, if we've got some units that potentially like to hoard spaces across the campus, will they be more likely to give them up to lower their costs overall for facilities and utilities, return that to general campus use, and we might have more space available for flexible class scheduling, things like that. Because that is always, I don't know, I mean, that's what I hear too, is it's always difficult for finding classes across the campus, so, or space for classes. Yeah.
So with all this talk about enrollment, it's got me thinking, I know a lot in K through 12 education, we talk about like cost per pupil that is spent across the state. Is that ever a measure that's used when you're looking at university funding or looking at specific colleges?
The legislature's tried to look at what is a cost of degree, cost of instruction. It's very difficult. Every institution's a little bit differently how they account for it. We don't look at it in terms of are we allocating it in that fashion, but
Isn't that a graph though of the per student FTE?
that's just our overall expense per FTE. I think
Okay.
what you're getting at is, would you allocate a budget because it might be more costly to expend or cost to instruct a student that's taking engineering versus I don't know, liberal arts or something like that.
Differential tuition.
Yeah.
Some universities have done that. Which, I mean, if you look at our fee structure, it
That's what we have.
basically is
Yeah.
differential
That's what we have,
specialist is
yeah.
basically what it is, but there's more standardized in some other institutions.
I just have a question.
Yeah,
Absolutely.
And like,
I'm here all night.
I'm just I'm just concerned because I mean it's troubling hearing our dean talk. Part of the justification I feel like it gives for the fees that are trying to be implemented in the College of Engineering is administration, right? Is the kind of like obsolete nature of the budget
Oh.
and the need to implement this RCM kind of
Yeah.
model that you're talking about.
Right.
So I feel like it's something that we should consider as a TFSC. The status of that model, because I feel like the way he talks about it is if those revenue returns happen, then there's not as much of a necessity for a fee, right? So do you have any kind of frame of reference on what?
Where we're at in the
Yeah.
process, we're at the very beginning stages.
Okay.
On the budget office website, we do have a brief page dedicated to the budget project, and it gives a real brief timeline. Our hope is to have a model available in April that would be available for units to look at. I'm very cautious about committing to that date, even though we've put it in writing. There is a significant amount of work and also a significant amount of political socialization that we have to do across this campus because, I've done enough, I've read a lot of things, I kind of understand the general concepts, but not everybody understands what a new budget model does and what it would look like. And so we have a lot of work yet to do in terms of how are we going to allocate those costs, right? So how am I going to really allocate the costs to Brian's department for utilities and facilities and custodians and things like that? And I guarantee you, we've got 10 academic colleges. Each of those representatives from those colleges is going to have a different opinion about how we should allocate those costs. So we've got to work through all of that before we can get to any sort of a model that we can sort of put out and have people available to look at. Now, in Dean Dawson's case, he might be right at some level that he's instructing more, he's generating more revenue. It might mean more revenue for him coming in, but he's also got his own building and operational costs that he's got to pay for. So at the end of the day, he should see more revenue coming to him directly, but he's also going to see some more costs. So what's that going to look like for him? There's also going to be a number of units that are going to be very nervous under this because they aren't generating the credit hours, but they still have tenure track faculty that they have to maintain and employ. So how does that look for them? So when we've talked about when are we going to implement this model, we've never made a decision about that, but we've talked about, do we run our current incremental model next year in parallel with our new model so that units have time to understand what are the implications, what do I need to be preparing for before we actually go to our new model? Do we phase it in over a number of years? I mean, I think there's still a lot of unknowns about how we're going to implement it to really give you a good firm answer of, is he going to see more revenue next year right away?
I think they all know the revenue side, but nobody
Nobody
knows the expense side.
Yeah.
So everybody's like, yeah, just give us our revenue. You know what I mean? We'll be good, but then nobody knows what the expenses are. You know what I mean?
Yeah.
Which bill for the internet?
Yeah,
Yeah,
well,
exactly.
well, it is really.
Yeah.
But I mean, nobody knows what that expense is, and so they don't know how those kind of match and kind of how they're going to come out. I guess there's some units that know just revenue-wise that they're probably not going to look very good. Under a new model.
When I, at the end of the day, when you come back to our GU budget, right? It's all allocated out today. It's either allocated directly to a pool for scholarships or it's allocated directly to a pool for utility costs. Well, in some ways, I'm going to just change and rearrange how I'm sending the dollars out, but I'm also changing how I'm assessing the cost for some of these things. So at the end of the day, my pool doesn't change necessarily. I'm just rearranging how it's going to go out the door for people to understand what's my profit, what's my loss, or what are my expenses that are generated out there. And people have to get used to that new model. And I can guarantee you there's a lot of units that are really nervous about what are the implications of this? What does this mean? Because we have been under an incremental model. They have gotten used to, in some fashion, stable funding in some form for a number of years. Well, now that sort of changes, and it's a little nerve-wracking.
Yeah, is the budget remodeling across the university, or is that just a main campus thing?
We're still working on that, but it will impact almost all the units on across the university. So we're still working on that. We're still trying to figure out all the different revenue sources we're going to include in the model.
So you're talking about like Salina and things, or what?
That end, particularly.
Yeah, we're still working on it. Are you the vet net?
Yes.
Okay. Still working on it.
And my question was going to be along that vein, like how does, for research and extensions, to say don't generate any credit hours, I assume?
You're right. A lot of research and extension that was funded off of the federal land grant dollars that we have, other federal dollars that they generate. They also have dedicated state appropriations that come to them as well. Now, just like the rest of main campus, those state appropriations haven't kept pace with the rising costs that they've had, and I've also had some cuts. So we've had to help those units out and provide some tuition dollars to sustain those operations. So they're going to participate in the model as well. And what, in a lot of ways, what you're kind of talking about is, although you're not generating revenue, the services you perform are vital to the institution, either because of our research mission, our land grant mission, and so we want to maintain those levels of services. And so within the model, we would have dollars sort of held back that would help to fund those activities, even though you're not generating revenue. So when I say Brian is going to get the revenue that he generates, yes, in some fashion, but we will probably take a bit off of that to help us pay for some of these other activities that don't generate revenue but are important to our institution, our mission that we have.
Like student life.
Student life would be one, yeah. Student life might end up actually being more billed out to the different colleges because of the activities that they perform in some fashion.
I'm kind of a question not really on base with this. However, I just was curious. So we pay about, also, I have a bunch of these in my office. Thank you for sending these, by the way. I think that was you. Maybe Cindy did. Budget cards.
You might be on our list.
I use that all the time.
Yeah. But I don't know, I got a stack in my office, so if anybody wants one.
Probably make card holidays out of it.
Exactly. That's what I was saying. But so debt service, the university pays $9 million a year in debt service.
That's primarily our utilities debt service. We have a lot of other debt service. That's our operating budget. And so we have a lot of capital debt that is not included in these that are paid. So a good example might be the Seton Hall, the renovation. We took out debt to renovate that. We're paying for it with our educational building fund. That debt service isn't necessarily reflected in that $9 million. It's primarily just the operational, the GU side of it that we've paid.
I see.
So we have more than $9 million in debt. That we're
I was going to say that seemed really low.
Yeah.
And the educational building fund comes from where?
From the state.
Okay.
It's outside of our state general fund. It's a different pot the state gives us. It's actually based off of property taxes that are assessed statewide. Those revenues are brought in. It's assessed in specifically for educational buildings, the renovation of them, maintenance of them. And so that pot comes to the state, and then it's allocated back out to the universities based on a square footage basis of facilities set back in, I think in the 90s, 80s or 90s.
And isn't it current state law that we can only update certain buildings
Yes.
that are, yeah, can you explain that?
Not very well.
Okay, well, yeah. Better than I
But
do,
yes,
I'm sure.
you have the answer. The answer is correct. We're only supposed to use those dollars for buildings that are on our list, approved list of facilities and square footage that we had. That's the basis for what we get those dollars. So the new College of Business building is not on that list, and we cannot use those educational building fund dollars to renovate that facility.
So it would take an act of legislation to change that.
Yes.
Okay, yes.
Yeah, it would take an act of legislation.
And we'll talk more about it this year in the committee, but the educational building fund, we're kind of looking at what that money is being, how that money is being spent, and based on that, working with our academic infrastructure support fee, which is about $1 billion. $1 billion! Oh yeah, not the B. $1 million.
We just solved our
I was going to say, we're going to spend billions on buildings on campus. No, $1 million. And so that's kind of been an interesting part of the discussion too, is how much money are we available, educational building fund, and where's that being spent? So more on that here later in the spring. All right. Any other questions for Ethan?
Yeah, go ahead.
Are you willing to share this with
Yeah,
us?
It's on that, yeah. I mean, you can have it.
Got it saved, yeah. I'll send it over here. So.
Just don't make any memes out of my recording.
I was gonna say, yeah.
That's all I ask.
Very good.
Did anyone ask that state funding proposal of what you foresee?
Yes, yep,
Okay.
the question came up, yep.
Good.
I gave a very long-winded, we don't know.
Well,
It's not great, is it? It's not great.
It's not great.
All right.
Thank you, guys. Appreciate it.
Thank you. All right. So just a couple of quick.
Ethan, do you need your jump drive?
I got it.
Okay,
Got it.
cool.
It's on the desktop.
Yeah, got it. Yep. Thanks, Ethan. Couple quick housekeeping things. I was messing with the technology and didn't want to delay Ethan. So we didn't ever get a chance to do introductions or anything. So I guess retroactively, welcome to the first Tuition Fee Strategies Committee meeting. James, do you want to get us started? We'll go around and explain who you are, what group you represent.
Yeah, I'm James Krutz. I'm for the graduate school.
Yeah, Dalton Maples and the College of Education.
Ryan Kelly, College of Engineering.
Miranda Moore, College of Arts and Sciences.
I'm Jonathan Pushin. I'm the Speaker of the Student Senate and co-chair of this committee with Jack, and I'm also from the College of Engineering.
My name is Brett. I am from College of Ed.
I'm Julia Kemp. I'm from College of Human Ecology.
Hi, I'm Brian Minshew. I'm also College of College of Happy River. I'm faculty and president.
Heather Reed, student life and advisor for SGA.
All right, Jack Harris from the College of Engineering, but here as student body president. So I just wanted to kind of touch base on some of our logistics plans moving forward. Wanted to have this initial round of education. This was being recorded, so we got this crazy, awesome technology. So we will send that to folks who are not able to be here. It'll also be up on I think I'm going to try to make a Canvas page, actually. I think that might be best this year for us. So maybe I'll ask Miranda how to do that. She'll let me too. So, well, they're on YouTube as well from last year. So that's the other thing. And I'll put that in with some information. So there will be a couple things you can be expecting here coming down the pipe. Is one, a doodle poll that'll be coming out to establish a good time to meet next semester. This 5:30 on Tuesday has been the same time for the last however long, and it seems to work for most people, but you can definitely have a chance to express if you absolutely hate that on a doodle poll.
I think our freshman year was at 7 a.m.
Yeah, I'd like to avoid that.
on Wednesdays. So.
I'd really like to avoid that, but I mean, if we have to, that would work as well. Last year we had a couple 7 a.m. meetings towards the end when we were trying to figure some things out last minute. But so that'll be coming down. There'll be an informational packet. There'll be some awesome winter break reading for you. Last year the packet was 120 pages long. I'll probably add about 25 this year, so should be good. You don't have to read all of the pages. A lot of them are minutes not minutes, but reports from previous years, but it does kind of provide a good historical kind of context to where we are, things like that. Trying to think what else. Included in that informational packet, I'll give you links to last year's recordings so you understand kind of what that context of those discussions are, which I think will be particularly important if we hear proposals from units that we heard from last year, kind of contextualize the discussion. But I was going to talk about that for a quick second. I'd say a couple things about the process. So the first part of our spring will be considering fee proposals, and then the second part will be dedicated to tuition proposals from the university. So colleges, and I guess departments as well, will put forward fee proposals to the provost by February 1st, and so we will meet. I want to have one meeting in January at the end, and then have some. We'll get started in February hearing proposals from each unit, or presentations from each unit that have proposed a fee, and then we'll make our recommendations based on that. Couple things. I think that something that I was talking to Ryan about today actually is that there's a really pretty in-depth discussion a couple of years ago in SGA about the ability for Tuition and Fees Strategies Committee to make multi-year recommendations. And that proposal basically came out and said this proposal that SGA, or that this committee would be able to say we're going to set a 5-year plan for a college fee. And that failed, and I think it failed for good reason, which is to say that each year is different. So just because we approved of an increase in the College of Business last year does not mean we have to do that this year, even if it was, and it's not, but even if it was part of the plan. Or engineering, for example, engineering came forward with a $38 proposal last year. they're going to come forward with a $15 proposal of some kind this year. And just because it was a no last year does not bind us to anything this year. Nor does saying yes this year bind us to anything in the future. So just kind of to have an open mind, I think, when it comes to those things. For the repeat offenders in the room, I know it's easy to think about that. That's why I said I want to contextualize the discussions, but not stop any discussions based on anything that did or did not happen or based on any recommendations for or against any proposals last year. So does that kind of make sense? A little bit of our game plan to move forward. All right. And like I said, I think it's just that time of year. So we'll have it'll be room will be a little more full. I told the administrators that we don't have that we'll have that this meeting will be pretty informational. So Dr. Bosco, Provost Mason, and then Vice President for Administration and Finance, Cindy Bontrager, will come to all of our future meetings. So should be fun.
Just to jump in here too, and
Absolutely.
you may have already covered this with everybody, but of all our SGA committees that we have and all the allocations, various committees are responsible for, I don't think there's one that has the responsibilities that you all do. And I just want to impress upon you how important it is to do your homework. You need to come in here ready to sit down, knowing what's on the table for that proposal, really taking the time to look it over. And I know that seems like a daunting job, but you're representing all the student body here, and you're making a recommendation that, except for last year, has always been received as the recommendations going forward.
And it ended up being received last year.
So that if you want some time, you'll have to sit and have coffee with Jack, and he can fill you in on that. Last year was quite an interesting year.
Yeah, that'll be part of your 135-page.
Jack and I are at the Regents, and
Yeah.
it's strongly considered what you guys say in here. I mean, they were very emphatic, about the fact that this is what the students, said, I guess, and things. This is what the committee said, I guess, and this is what a lot of them were talking about, I guess, and things when they were discussing this at that level.
And I think, and one of the things President, just for a little bit of context about what Dr. Lynch said with the Board of Regents, when ultimately this will come to head when this gets presented to the Board of Regents. And last year there were, I would say K-State and another university in Kansas that had a fee proposal go forward that students didn't support, or that there wasn't good support for. And I think at K-State, President Myers allowed me to stand up and speak on why we didn't support it, and the discussion we had was really pretty good. And President Myers said, to the Regents, I really respect what the students have said, and I take their counsel very seriously because it's good recommendation. It's well supported. And the other school that wasn't as present. And so I think it's important to know that, like Heather said, I think it's kind of got to rise to the challenge, because we have an awesome responsibility that's also, I think, pretty unique across the country, honestly, especially talk to other student body presidents that we have the ability to do this. So something to think about.
So thanks each and every one of you for serving and for all the work you'll put in on this, because it will be a lot of work, and you will get to hear things and from deans and things. I mean, it's like you're going to be in the room where it happens. And so really take that on as a personal responsibility yourself to be ready for those meetings, and then to ask questions. Don't let, just because Vice President Bontrager is saying this or that, you don't understand what she said, you reframe the question and ask again. You need to make sure you get your questions asked, and really, we have such great administrators. You can ask them anything. So never leave this room going, darn, I wish I would have really asked that question. That's your job here, to ask those questions. So don't be shy. Dive right in, do your homework, ask the questions, and work together. And I think this will be another really good year.
Absolutely.
Challenging, but
Liv, you want to real quickly introduce yourself to we're here?
Yeah, sorry, I'm chairing EOF this year. We just got done with our last meeting, so sorry I'm a little bit late, but just get from there too. I'm Olivia, student body vice president, and I will be taking the minutes of this meeting. So,
Fun task, yeah.
Yeah.
Well, are there any other, are there any questions or
Do you guys have a sense on what's coming yet or not from colleges and things?
engineering's coming? I know that. I know that will happen. No, I need to.
But I was saying, given the budget climate, I think there could be
I
a
know where
lot.
some
You know what I mean?
signs-
Like that's coming, I guess, and things, and so I didn't know when you guys would know, I guess when that's happening. and
Yeah.
things or what.
I will touch base with Provost Mason and see if I can include a little bit of that, because I think you got a great point that it could be 5 or 6
I
fee
would be
proposals.
shocked if it's not.
Yeah. Last year we had 4 academic fees, 1 university-wide fee. And 2 academic fees and 1 university-wide fee were recommended. So, yeah.
Do you know if colleges have to run a fee by this committee before they do it?
Yes. There,
It depends on the amount that it generates.
fees that generate less than $250,000 are do not go through the same process that this does, where it's individually voted on by the regents. However, it still has to be approved by the president, is my understanding. And when there was a fee that was coming up that potentially would get around, there was a proposal that was gonna get around that process. And Provost Mason made it clear that she wanted those to come to us anyway. And I'm very appreciative of that. So, yeah. All right, everybody. Well, if there are no other questions, we will see you in January. Be looking out for that wonderful long document. I'm gonna have to. Last year it was long enough that I couldn't send it in an email. I had to give you a link to go download it. So it's good. It'll be fun. Looking forward to it. James.
Jack, can you email everyone Ethan's presentation or share it somehow?
Yep, that would be part of my. Yep, great. That's good. That's a good point. We'll do that. Cool. Jonathan, do you have anything?
No,
Sorry, I'm just talking everybody's ear off.
you're doing great, Jack. So, just along for the ride.
That's right. Jonathan's a repeat offender too, so he
Yeah.
was in. I guess Sarah's not here. Sarah's position last year, so
Yeah.
good deal.
Be a good year.
Absolutely. All right, everybody. Thanks so much.